Well, hello and welcome. You are watching this very special coverage, Market Watch on ET Now as we touch 8,300 on the index and shrug off the Brexit blues if they were there in the first place.
Yeah, indeed. Clearly shrugged off all and everything when it came to the Brexit blues. The Sensex has managed to gain over 200 points. The Nifty tested 8,300 today. That's the highest level this year as the June futures expired as well today. So nice big move coming in, and Neeraj, clearly it seems like the investors are now willing to look beyond the short term for the markets.
It certainly seemed to be the case over the last 3 or 4 sessions. They focused on the positive factors at play. And it showed in the way the market breadth panned out, in the way the index has shaped up, not just on the expiry day, but over the course of the last 7 days. A big fall in Friday's session and then recouping all of the losses, importantly ending 1% higher. So before we go to our guests for the show today, let's take it across to our research team members, Ajay Sharma, Darshan Mehta and Vivek Iyer, who join us for a well-rounded view on what is moving the markets, what within the markets are moving as well. And Ajay, what is driving the sentiment right now?
Well, that's correct. A couple of fundamental factors also driving the rally which we are looking at, which have taken us back to the 2016 highs. One, of course, market is trying to realize more and more that Indian economy is immune to, to a large extent to shocks like the concerns which were coming in from because of the Brexit event. There was initial knee-jerk reaction, after which market rebound very sharply, and ever since each day the market fell, market has a rebound. So more and more realization that India economy is a domestic oriented economy and Brexit will have only a limited impact. Not only that, there are other positives which also cushion the fall. One, of course, is the possibility that GST may be passed. At least it will definitely be taken up in the monsoon session. That's firing up all the GST related stocks. Apart from that, monsoon advancement has been pretty much on lines with expectations. There has not been a deficit monsoon so far. The advance has been pretty nicely geographically spread. That is giving people a lot of confidence on the street. Not only that, the government action has been very strong. The frequency at which they are coming out and passing new bills, they are coming out and announcing 7th pay commission implementation as well. That is also giving a lot of sense to the market when the domestic consumption theme is alive. So, of course, DII flows into the market has been good and FII outflows have not been very elevated. So, all these combination of fundamental factors also fueling this rally which has taken the market to 2016 highs.
Yeah, indeed. What a fabulous week it's turned out to be for the markets. Let me also bring on board then Jai Bala, our expert joining in right now. I'll of course come to Darshan and Vivek as well to find out what's been fueling this rally the last few days. And Jai, hi, evening. What a fabulous move it has been for the markets, and not just Indian markets. Across the globe, markets have clearly sort of climbed the wall of worry as they are famous to do so. But does it seem like this is just a technical rebound which is at play? Or do you think fundamentally people are now beginning to realize that the Brexit is going to be a long drawn 2-year kind of move? So, I mean, why sell in such a hurry?
Yeah, the market is sending a very clear message. If you looked at what is the voices that were coming out on the market previous to this event, everybody was bearish, and it was fashionable to sell fear, and every event was equated to the Lehman crisis or the housing crisis or whatever that fancies you. It was very fashionable to sell fear. But what the market is actually telling you is that it's exactly the other way. It's trying to fade the popular consensus, and that's the reason why the market is higher. In the market, the money always flows from the majority to the minority, and the minority is what is called the smart money. So the market is able to fade the crowd, and it's taking the market away from the rest of the consensus.
So, okay, that's a fair point. And CK, do you concur with that? What is your view, CK Narayan, on the Nifty and the bank Nifty, which is kind of short strength, because until now everybody was thinking banks will collapse. They haven't quite done that, CK.
See, the Nifty has rolled along during this week for about 4 days in succession, creating higher highs and indeed running up with large upside gaps. Now this, I believe, is a kind of reaction to the sharp fall that we had on the Brexit day in the earlier week, and so lots of shorts were getting covered initially, and then people finding that the market is not really falling have actually scrambled to get on board, and that is what has produced the flurry of activity. Now that we are back at the former highs that we had created about a month ago, I think it's actually calling for a time of caution, because at about 8300, 8320, the Nifty runs into some amount of former resistances, and it will require some fresh news flow as well as events to happen to kind of further that upside move. Same is the situation with the Bank Nifty, where 17,900, 18,000 has loomed as a strong resistance, and we are back into those very same zones as of now. So unless we have strong follow-through buying coming in the week ahead, both Nifty and Bank Nifty will find it difficult to sustain the kind of uptrend they have seen. If they do, then we are possibly looking at about 8450 on the higher side for the Nifty, and about 18,300 as the possible target for the Bank Nifty. But a failure to show any kind of follow-up will see Nifty coming back to somewhere around 8,050, and the Bank Nifty also likewise to retrace its way back to about 17,400. So we are at a significant inflection point where the Nifty could either go up a few hundred points or actually come down by a few hundred points as well.
Yeah, indeed. You can't run away from the volatility that may actually kick in, can you? But Jai Bala, what is your own sense? Does it seem like we're only as good as the technical rebound in the global markets? That's Indian equity. So do you think, you know, in the run up to 8,300, we've carried so much momentum that we can actually go through irrespective of what the globe is up to?
Yeah, India is in a very strong spot, and it is one of the markets that's standing out, and it's withstood all the annihilation that's come in the global market space. That itself is a clear indication that this market is there to outperform. And there are two ways to interpret the market's movement from the February lows. You can see it as a correction or see it as a resumption of an uptrend. I'm seeing this as a resumption of an uptrend, and I'm looking at record highs to come through for the market in the next 45 weeks, and that's projected to in the region of 9,600 on the Nifty. Even if you interpret this market as just as a correction, it's anyway likely to get through somewhere close to 8,600 to 8,700. The way it gets to 8,600 or 8,700, that's going to give you a very clear message. If it gets there quicker, it's going to be a reiteration of the fact that my interpretation is the correct interpretation. And if it try to get slower, we have to readjust our views to in such a way that the market is telling us we need to readjust our views. So the way it gets to the next 300 points, that's going to be pretty important for the market.
Okay, so that's the market mood, what's led to this rally and what's the outlook on the markets over the near term. However, it's important to note that there are a few set of stocks which have participated in this rally as well. Sure enough, the likes of Tata Motors and a few others did have their pain points, but they too have come back. But there are stocks that are really drilling in the rally in the last few days, and Darshan joins in to speak about that particular lot which have erased the losses post the Brexit vote. Darshan.
So Nifty did manage to hit a fresh 2016 high in trade today. The earlier high was in the start of the month, and that level was 8294.95. So Nifty did manage to go above that. Even today on the spot level, the 8300 level was taken out. The Nifty has been moving significantly in trade, and so the last time the Nifty was at the 8300 mark level was in October 2015, the 26th of October 2015. Now over the past few days, the Nifty has managed to recover all the Brexit losses. It's been up almost 2.5% in the past 4 trading session. The other important thing was the Sensex did manage to hit the 27,000 mark in trade, and the Bank Nifty is just almost 100 points away from its 2016 high. So there is a lot of traction as far as the indices is concerned. What helped us the Bank Nifty was obviously the private sector banks that did extremely well compared to the PSU banks which were down in trade on a YTD basis. Some of the counters that will be in focus and have moved significantly from the start of the year are counters like Yes Bank, which is up 52%. You have Hindalco, which is up 44%. There is Ambuja, Tata Steel and Bosch Grasim, which are up close to 23%, and BPCL and Ultratech are up almost 22 to 23% in trade. So the large cap really leading the rally, but it's been an important day wherein a fresh 2016 high was hit, and even the 8300 mark was taken in trade.
Yeah, indeed. What a move it has been for some of these nifty constituents, as has been the case, CK, for broader markets as well. Heartening to see that on a daily basis, you've seen outperformance from the broader end of the market. Do you think this is likely to stay and they're going to continue to outperform the benchmark indexes?
If you look at the mid-cap index, there has been a clear upside breakout in that particular chart, which indicates that the broader market is the one which is now witnessing some fresh action, fresh fund flow, fresh inflow of, let's say, buy orders. So I do believe if the Nifty and Bank Nifty were to remain steady, that is the large cap market remains steady, it need not even go up, then the flow of funds to the mid and small cap will probably continue. And in such a case, this area of the market can very definitely outperform the large cap area. Large caps have done well in the recent times, so I think it'll be now what with with the result season right around the corner, maybe a week or two away from here. Maybe now the rumor mills will become active and the mid caps should actually do pretty well for themselves.
So, Jai Bala, what about the broader market outperformance, which was stark here? I mean, my question is, I know we can't predict what the CNX small cap index could do, but within that, there are specific components which are leading the charge. I mean, the soft commodity names are generally having a good run. We've seen NBFCs generally having a good run. Which within these do you think as a pocket would continue to outperform?
I think the mid-cap cement has a very high probability of continuing to outperform. It's already doing that and sending a very clear message at this point of time. If you keep your eyes open for something like an Orient cement, which usually not talked about much, that's looking very attractive, and it's already come up from the recent lows to about 180 odds, and it's still got quite a bit of upside left. And you can even look at something like a JK Cement on the mid-cap cement space. That's looking attractive. If you look at something like the carbon space, the carbon black space, like the Philip Carbon Black, we spoke about it a couple of months back. It was in the mid 90s to early hundreds. Now it's come up to 160. And now even that's looking attractive. You can even look at Goa Carbon. Now there are some pockets like this. You got to have an eagle eye to identify these. You should focus on risk reward rather than anything else. You should be able to pick these winners from a low risk reward perspective. And if you can do that, I think there's abundant opportunity in this market.
Yes, that opportunity definitely exists. Stay on, Bala, stay on CK and stay on our research team members as well. We'll get to Vivek on the other side of this break. We need to slip into one, come back from the break, talk about some other mid-cap movers in trade and try and ask our experts about the winners that you can pick in a market scenario like this.
Back with the ET now right here, and we're doing a special analysis of what really transpired in Dalal Street. It clearly seems like the Brexit shocker is much done and digested, not just for us, for across the globe and for us as well. It being expiry day, we managed to sail along that 8,300 mark, although towards close ebbed off a wee bit, and good traction from the broader markets, and that has been the case the past many trading sessions as well. Okay, so let's chat about what really lies ahead. CK Narayan is with us, and also got Jai Bala from cashthechaos.com. And Bala, just trying to figure out the pockets of strength. You just talked about the cement rally which is taking place, but clearly it seems like this is a market which is taking every sector up along with it. Even IT, which has really been the shocker, so to speak, post the Brexit vote out. The fact that there were growing concerns about the IT companies' exposure to the European as well as the UK business, that as well has ebbed off. So it seems like this is a market wherein all and every sector is going to rise up.
Yeah, that's true. A rising tide lifts all boats. So that's the case. But there are pockets which are still not performing as they are expected to perform. So what we are seeing so far, in my opinion, is probably the beginning of the show rather than the climax. So there's much more steam left in this market. So we're going to see outperformance for this market come through from banking, FMCG initially. Once this sector takes the market to the next orbit, we're going to see even laggards like the oil and gas space, like upstream stocks like Kane, Reliance, which has been languishing for the last few weeks. Even they're going to join, and in fact, some of them could take lead and propel the markets to much higher levels.
Before we get to mid caps, and Vivek has a list of there are some large cap stocks on which CK Narayan, I want your view on, because there were stocks like BHEL, Axis Bank, etc., which gained in the session today. How would you approach trades in those names, CK?
As far as Axis Bank is concerned, I think we are seeing action come back into, let's say, private sector bank as a whole after a pause of, I think, almost 2 to 3 weeks. Now, in Axis Bank, and you could see similar moves also happening in Yes Bank, and to some extent, I think also maybe IndusInd Bank, Kotak Bank as well. So I think this entire pack is now witnessing renewed kind of buying, because the PSU banks had all run up pretty well. I think in the coming week, the PSU banks will probably halt and action will return to the private sector bank. And within that, I think Axis Bank is something which has retraced very nicely down into support and should probably do well. I would think a price move till about 550, 560 seems to be on the cards for Axis Bank. BHEL, on the other hand, was driven by some rumors in the market, and it remains to be seen whether those rumors really come about or not. But be that as it may, I think the whole capital goods space was a bit on the move. You had decent moves coming in the other stocks. So the overall market was good as well. So I think BHEL had a mix of shorts getting covered and fresh longs coming in, and this rumor also helped. So maybe BHEL can make further tracks till about 133 to 136, where the next set of resistances are. On the lower side, 121 to 122 should act as support.
Right. Vivek, want to get you in at this juncture. Is this rally really limited to the large caps? What is the story in the broader market for the day and, of course, year-to-date performance as well?
Well, after looking at the 2016 high that the Nifty hit today, we turned our spotlight onto the broader market. That is the mid-cap and the small-cap index. And what we are actually seeing is that recently the mid-cap and the small-cap index have consistently and outperformed the benchmark indices. Especially if you're looking at the small-cap index for the month of June, it has gone up almost 11%. And in a very interesting observation, out of the 22 sessions in June that we've seen so far, the small cap index has gained in 18 out of those 22 sessions. Now, if you're looking at the mid cap index, it's trading at the highest level since August 2015. Clearly, quite a bit of outperformance seen over there. And the stocks that have actually gone ahead and done really well in 2016, Bharat Financial up almost 48%, Ramco Cements up almost 47%. Biocon, the stock that we saw recently hitting lifetime highs, almost consecutive sessions, up almost 45% in 2016. Coming to the small cap index, which are the stocks that have done well. If you're talking about Manappuram Finance, up 144% in 2016, GNFC up almost 107%, and a sugar sector player as well, Balrampur Chini, up almost 81% just in 2016.
Yeah, there are some key mid caps out there, and I think Jai, of course, spoke about some stocks. But Jai Bala, if you had to choose two names, either from a short-term trade perspective or from a 7-day, 10-day positional trade perspective, what is it that is looking the best on the charts? You mentioned some small cap names, but what about a positional trade in maybe some of the mid-sized names?
Yeah, if you look like Bharat Forge, I think that's looking quite attractive from short-term aspect. I think it's looking like a doubler from here. The recent lows is very important for us for this particular stock. I think we can. So given that if you miss this in the short term, it gives you a nice backup, for you to hold on to that in a medium term. But you're doing that just because the medium term trend is up and the last 2 days of price action is looking quite positive. So focus on Bharat Forge. It's likely to double from current levels, and can expect if the Nifty is likely to hit to 8600, 8700 like we are anticipating. I think this should give a nice tidy 20-25% in the short term.
Oh, that's an interesting one. Bharat Forge, of course, is the stock idea coming in from Jai Bala. But CK, what about your stock picks for trade tomorrow?
Well, I think moving ahead, there would be two sets that I would look to concentrate on. I think Titan has moved above 400 levels after a very long time, and there is this move has also been preceded by a large congestion zone, and therefore we should consider this a breakout out of a long-standing congestion, which could now help the stock to move up to somewhere around 435 to 440. So long positions in Titan can be looked at with a stop loss placed below 390. The second stock which one could look at, or maybe a pair of stocks which one could look at, could be the two-wheeler stocks, either Bajaj Auto or Hero Motor, both of which are pushing up to test new high levels. I think the award from the Pay Commission should probably light up the areas of the two-wheelers with some fresh demands. And if we find that the auto sales numbers which might roll out in the first week, starting a day or two from now, if they come out with decent numbers for Bajaj or Hero Motor, I think these two stocks can get a very good shot in the arm. So combined with these two elements and the fact that the stocks are trading up into a very, very nice level on the charts, I think I would remain bullish on both of these, with an expectation of at least another 5-6% move ahead in the week from now.
Okay, CK. Okay, Jai, good having you. Thank you so much for taking the time out this evening and giving us your views on this, at this hour on what's arguably been a great week for the markets.
Yeah, it has been. And as we wrap it up in this show, let's also get to you some big market voices on what they make of the developments post the historic Brexit vote. Here's a view from Russell Napier.
Well, I think global inflation is coming down, which is always beneficial to India. And the good thing about India is it's not reliant on that old model. That old export-oriented model is not India's model, so it can be much more flexible in turning around for this new era we're heading into. So if the world begins to look at emerging markets as a different type of world, India will be one of the first places they look at. But until China makes its adjustment, given how huge it is, to me it's just too dangerous to buy any emerging market until that's out of the way. Okay, that could be a fifth grade bottom, by the way, after that adjustment, but equities would be a lot cheaper. India has policy flexibility to try and deal with all this, so that doesn't make me optimistic. But imagine if you lived in a country without that policy flexibility. Imagine if you lived in Greece or Spain or Italy. So, clearly India is going to look better than many places, but that doesn't necessarily make you bullish on the equity market. People have to realise why a lot of people voted out, and that was just to have a sovereign parliament, a parliament where every day I go to the ballot box, I can fire any incompetent politician. It's an important thing to be able to do, and now there isn't a politician making my laws that I can't fire. So we are now as independent as India. I think it's a wonderful day. There are huge costs, there are huge prices to pay, but there are many things in life more important than money. In terms of market impact, obviously all that anybody cares about is not the United Kingdom. The questions I get asked are what's going to happen in Europe. Are there any other peoples in Europe who feel the same way, that they'd like an independent parliament and not the pooling of sovereignty? And it's crucial to say that all over the world states cooperate. They pool their interests, they cooperate. It's a wonderful thing. We all do it. We do it with India. Canada does it with India. That's different than a pooling of sovereignty. So the vote is not against Europe, the vote is against a pooling of sovereignty within Europe. So now we progress and we go forward. But the key market question is a very simple one, and that is monetary policy is seen to have failed already before Brexit. I think the Central Bank of Europe and Japan and others had got as far as they could. So the only question that really matters now is, will Mrs. Merkel back down from austerity and this enforced austerity across the rest of Europe? And if we answer that question, we know a lot about financial markets in the near term and a lot about whether this political integration of Europe will actually succeed. Because I think without her doing that, it's going to be extremely difficult. I think there's no doubt there's a negative hit from this for both the United Kingdom and Europe. And in many ways, it's likely to be worse for Europe. And I know that sounds very peculiar, but Europe already had a banking crisis building up, particularly in Italy, and this is long before the Brexit vote. I mean, people are going to blame a lot of this on Brexit, but many of these things were happening anyway. The situation in Italy is so severe that we can even use the word banking crisis developing there. And it's not just Italy. We look at Deutsche Bank and we look at how far its share price has fallen now, just to stress, all before Brexit, and of course exacerbated post-Brexit, but already happening. Credit Suisse. Monetary policy is failing. So the question for the United Kingdom, for Europe, is all the same questions. If it's not working, what do we do next? Now, I know no one's talking about it for the United Kingdom. If absolutely necessary, we could do this large fiscal spend. The most striking thing about financial markets post-Brexit is that the yield on British government debt came down. Now, this is a country that runs a huge current account deficit. I know in India you're always worried about your current account deficit, but ours is even bigger.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.